All right, so whole life insurance is the most powerful asset on the face of the earth when it is utilized properly. This is the second video in a two-part series. In the last video, I went through the first 5 reasons that I think whole life insurance is one of the most powerful assets in the world. And in this video, we're gonna be covering reason 5 through 10. I'm really excited. Make sure you stick around, check it out, subscribe, hit the bell, that way you're notified every time I launch a new video. If you are looking to utilize life insurance in your life, or if you're a life insurance agent looking to really grow your expertise and knowledge about how life insurance can work in people's lives, whole life insurance specifically. If you're looking to learn about all the different elements in the life insurance industry, I really focus on a lot of cash value, life insurance as an asset, and I encourage you to subscribe. That way you're notified every time I launch a new video so you can grow in your expertise as a life insurance agent so you can add more value to the people that you're looking to serve in their lives. So that's it. Thanks for being here. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and welcome back to part 2 of why whole life insurance is the most powerful asset on the face of the earth. Let's get into this. So I finished up, you can see my board back here. I finished up last video with hard money lending. And now what we're gonna do is we're gonna get into number 6, and that is going to be a business capital. I'm just gonna do biz cap reserve account. Think about it this way. Businesses need capital, right? Having access. Imagine how much your business would change if you could eliminate the need to be able to have to negotiate with your banker, right? Having access to this capital, imagine if you could eliminate all the interest expenses that you ever had on every major capital purchase that you ever made. What if you could fund the gap for your taxes and your payroll and stuff of that nature, and you didn't have to have a line of credit through a bank, but you could actually create your own pseudo line of credit utilizing a whole life insurance policy. If you haven't gotten into that, I just got done in the first video going through why it's a self-completing plan for an individual. But if you are a business owner and you have this need, I would say that this is the reason that you absolutely need whole life insurance. I would go back to the last video and watch how I kind of structured it, why you need an emergency fund and why you need an opportunity fund as an individual. And for a business, it's no different. You're just doing it for business reasons, right? You need that capital there. I would argue you probably need more as a business to be able to protect yourself and to be able to make sure that money's there in case of opportunity, because it's the people. Listen, in 2008, I read the statistic one time, it blew my mind. 70% of businesses that failed in 2008 were actually cash flow positive. They were positive businesses from an annual perspective. They were profitable, I should say, right? So 70% of businesses that failed, that went out of business, were profitable. The reason that they didn't succeed is because they didn't have reserve accounts. They couldn't weather a downswing in the economy, and they were over leveraged. And because they didn't have that capital reserve to get them through, banks cranked down the lending, right? They really got tight on their lending requirements. And so therefore the businesses that needed the money most to bridge them through this tough time ended up, they weren't able to get that money. And so businesses went out of business in 2008 like no other time since the Great Depression, right? And so it's those times. What did that do then? It created a lot of opportunity for the people that were able to take advantage of it. You could buy businesses and buy assets for businesses at pennies on the dollar and ride them back up, and a lot of people made a lot of wealth. Having control, and if you watch this channel, you know what I'm talking about. I talk a lot about control. Having control in that capacity is an extremely, extremely beneficial thing, when it comes to running your business. So I would suggest that is the 6th reason that everybody needs to, have whole life insurance. And if you could recapture the interest rates, if you could have more control, your business is going to just thrive more so and be protected and be more opportunistic, which honestly is a hugely competitive advantage to the people that you're probably competing against in your industry, in your niche, in your town, locality, whatever you're doing, right? And so that gets to number 7, which I already just kind of talked about, is that major capital purchases. I get ahead of myself. I can't help, I kind of blend all these things together. But major capital purchases to be made instead of using a bank, utilize them. So This goes for individuals and for businesses. You know, if you're a business, maybe you have equipment you need to buy. Maybe you have a vehicle. Maybe you have forklifts. Maybe you have other equipment that you need for your business. Maybe it's farming equipment. Whatever it is, but being able to recapture that interest that you would normally pay a bank, have more control of it, have more flexibility around the structuring of those loans. The fact that it's not going to smash your credit if you have a bad month, and if you can manage the cash flow. If you have a business that is more seasonally dependent on cash flow, you don't have equal months as far as income goes throughout the year, which, let's face it, is most businesses. This can be an extremely powerful tool for you because, let's face it, if you are a farm and you have seasonal income and then you need to go buy a tractor, right? And I'm doing this off the fly here. If you're a farm and you have seasonal income because maybe in the spring and the summer when you're harvesting your crops is when you're the busiest. I don't know if that's how farmers work, but I'm going to assume that that's the case, okay? You harvest the crops, that's when you make your money, but you needed a tractor. So if you go to a bank and you buy the tractor, you're going to have fixed loan payments every single month for that tractor. And so you have to be able to manage that every single month. You have to manage your own budget and your own cash flow, which can be challenging from a cash flow perspective. When you do your whole life insurance and you do your major capital purchases like that tractor through your policy, you can overpay, manage that cash flow while times are good. Let's face it, if the bulk of your money's coming in July or August, you can make bigger payments to your tractor then from an annual perspective. And then because of the whole life insurance having no loan provision, meaning or having an unstructured loan provision, I should say, you don't have to pay that payment in November, December, January, when times are a little tough, when cash flow is a little less. And then when things pick back up again in the spring, you can double down and you can manage it accordingly. On top of that, you are not giving the bank the money. You are borrowing against your policy. You're going to pay that to the insurance company, but you're never interrupting the growth of that policy all the while. And so ultimately you're recapturing the interest that you would pay the bank. And I'm not going to tell you you're paying to yourself. I know that's a very common, popularized way to kind of speak about this stuff, but that's just not how it works. You're never paying yourself interest. You're paying the insurance company interest, but because your money's going to be growing in the background, behind the scenes, because borrowing against the policy means that your money is still in the policy earning whatever the dividend and guarantees are the whole time. They're never going to be interrupted. So that's where the power is in this, and it can be pretty powerful. Now, I talked about this earlier a little bit when I was talking about the self-completing plan, so I'm not going to spend a lot of time here, but you need an emergency fund, right? That is, I think everybody, whether you're a business or you're an individual, you need an emergency fund. And I'm a big believer that you need an opportunity fund. I'm going to put these two together as far as how I'm talking about it. Just know that they're different things. So I'm a big believer you need 1 year, and then you need 2 years. So I guess one year of an opportunity fund. So 1 year of emergency fund, 1 year of an opportunity fund. You have the emergency fund to protect you when things go bad. This is what's going to help your business get through. This is what's going to help you pay your bills. This is what's going to, take care of emergency. This is your rainy day fund from a classic perspective. The opportunity fund, having an extra year, this is what you keep saving for to build on top of after you have your protection from your emergency fund. This is what I'm talking about when I was talking about the business capital reserve account. When you have this account, think about it from the business perspective. If you have access to capital when the rest of your competition is over leveraged, if you are a real estate investor and you have access to capital when the real estate market goes down and when banks restrict lending and nobody else can access it, what happens? It's the people with the money, with the liquid accessible cash, capital, that have all the opportunity kind of find them. And this is the reason, because so few people have this. This is the reason that real estate, it's the pendulum effect. If real estate's overhyped up right now, and maybe because the market's getting bad, and this is why I always tell people, the real estate market right now, I believe, is going to get way worse than people realize. And this is the reason. Think about this. Just use common sense. It's here. It's overly inflated. It was bubbled up. Now, realistically speaking, all the people that are saying, real estate's going to get right here, it's going to come back to its normal way of being. But the bottom line is the reason it got here is because interest rates were low. So they're going to jack interest rates up. And what's going to happen is, yeah, in a perfect world, from maybe on a spreadsheet, it's just going to fall right in the middle. But that doesn't account for human behavior. And human behavior says, well, even though it should get back to here, too few people don't have enough opportunity funds. Too few people don't have an emergency fund. They're not liquid enough. They don't have enough safe money. They're all speculating, and all their assets for most people in the United States are in investments, not savings. And so what happens is bad things happen. There's not enough liquidity. And so because only, let's say 5% of the people have a structure, a financial design like this, 95% don't, the pendulum swings way too far, and that makes asset prices get cheaper than they should be. And that's how the rich get richer and the poor get poorer and the middle class gets shrinking, because they don't have these two things set up. This is why I always say financial structure is more important than anything else. And understanding this, when you understand, okay, I need these two things, then you go, okay, what are the best accounts to keep it in? And you start to realize a lot of the things that I've talked about in 1 through 6, whole life insurance is the only financial product on the face of the earth that's going to give you all the attributes that you need to be able to accomplish all these different things, right? So that's extremely, extremely, extremely powerful. Now, final thing I want to talk about here, and reason number 10, why it's a super powerful thing, because I want to think about all these things. Remember, at the end of the day, this is all about getting your dollars to perform more than one function in your life, whether we're talking about it being a self-completing plan, make sure your family's taken care of, make sure your business partners, maybe it's a buy-sell agreement with a business partner. That's what it is. Living benefits, you want to control your living benefits. You want to make sure that you can control your medical directive, all these different things, right? You can utilize it for while you're alive, accelerated benefit riders. You can utilize the dividends for income. You can do distributions. You can do all sorts of different things in retirement. It's the BASF. It's going to enhance all your other investments like real estate or day trading. You could utilize it for real estate investing. Utilize it for private money or hard money lending. Use it for business capital reserve accounts, for major capital purchases to recapture the interest you're normally paying the bank, emergency fund, opportunity fund, and ultimately, when we get to the end here, this is what all these other ones are during accumulation years a little bit, except for I talked a smidge about retirement income. But what I want to talk about here is a volatility buffer. We know that when you're in retirement, you're probably going to be alive 25 to 35 years in retirement. And we know that the market is cyclical, right? We know it's going to go up, it's going to come down, it's going to go up, it's going to come down, it's going to go up, it's going to come down. These are what we call boom-bust cycles, right? So if we look at this, and let's say you're 65 right now, it's going to go up, or maybe you're 65 here, and the market's going to be about to go down. We don't know, right? But you're going to, over this 25 years, you're probably going to have, 1, 2, 3 cycles in retirement. So you have to be able to realize that during these times of challenge, when the market's correcting, this bust cycle in the boom bust cycle series, those are the times that derail your entire retirement plan. By having this money in a whole life policy, it checked all the boxes for you while you were accumulating, while you're building your business, while you're helping it during your accumulation years. A whole life insurance policy is going to help you operate more efficiently with your money, which is going to help you be able to get to where you want to go on a more predictable basis with less risk. So that's phenomenal stuff, right? However, on the other side, now you hit 65 years old and you become, you go from your accumulation years, you get to your distribution years, and you need to think about how am I going to the most effectively and efficiently distribute my money, and make sure, remember, it's not how much money you have in retirement, it's the cash flow that you have. You could have $10 million right now. That may sound really good, but if inflation goes out of control, $10 million, it's not what the $10 million is, it's the cash flow that you can get on a guaranteed basis out of that $10 million to help provide your lifestyle for the rest of your life. That's the most important part. Now, I've got videos on that, so make sure you subscribe and hit the bell that we're notified, and you check those out. I would encourage you to dig and dive deeper into those if that's of interest to you. But this volatility buffer is simply saying, in these negative years right here, like imagine you get to these times right here, right? In these negative channels, these negative times, you can take money out from your other investments when things are going up, when the market's going well, and that's awesome, right? Those times. But if you have to take money out in these bad times, that's where your account portfolio can your retirement portfolio can implode. by having a volatility buffer with a whole life insurance policy, what it allows you to do is it allows you in these times of challenge, right here, right? In these times, instead of utilizing your portfolio income from your investments, which entail risk, you can utilize whole life insurance to weather that storm, right? And that's a really, really important thing to understand. So when you start to do this, imagine that instead of trying to liquidate a negatively performing asset right here, you say, all right, I'm gonna stop. I'm not gonna use my investments. I'm just gonna let these come back and recover. Instead, I'm going to utilize my life insurance contract that is guaranteed, and because I'm not a big believer you should necessarily pull income out of it every single year from your whole life insurance policy. Can you? Yes, but I think it needs to be part of a bigger plan. And I think it's that kind of strategy. It's kind of second level. I'm not going to get into all the details about that right now, but I do believe that if you utilize a whole life insurance policy properly for retirement income as a volatility buffer. Once again, this goes back to it's the BASF of the financial industry. It's going to make all your other assets. This is just another way that it makes all your other assets better, right? It's going to make all your other investments better because it allows you to actually operate like a better investor from a human behavior perspective. This is the most powerful tool in the world. So when you break it down, these are the 10 reasons that I think whole life insurance is the most powerful asset on the face of the earth. This is the biggest reason. When I start talking about, I think every single person should have a whole life policy, this is why. So I hope it makes sense. If you have any questions, comment in the comment section below. As always, I'll do my best to engage with every single one. I'm actually starting, if you have questions, I'm starting to do a thing where I'm trying to respond because YouTube is doing some cool stuff from an engagement perspective. I'm going to try to respond to questions with short videos. So rather than just responding with just copy and text, I'm going to actually try to film videos and allow you to check those out through the whole thing that YouTube has going on. It's going to be pretty cool. So anyway, comment in the comment section below. If you haven't already, make sure you subscribe and hit the bell, because I'm excited about what's going on. I'm excited about 2023. I think, I've been doing this for over a decade now, and looking around and seeing kind of where the world is going, where the market is, what's happening right now. While a lot of people are going to be challenged greatly by the transitions that we're going through and by what's going on with the Fed, by inflation, by monetary policy in 2023 with the recession, I think really going to be getting into this in a bit more deep way. I think we're going to get deeper into a recession, and I think the rest of the world's going to finally acknowledge that recession in 2023, even though a lot of people are not currently. I think the reason I do this stuff, I know is going to benefit you. So if you are not subscribed to this channel, my encouragement to you is definitely do, because the content that I'm going to be making is really focused on helping you thrive through the recession that we're inevitably coming into. So anyway, that's it. Until next video, have a blessed, inspirational day. We'll talk soon. See ya.